Welcome to MDS Financial and the Market Analyzer trading platform. Today we're going to look at a specific trading strategy, the Donchian channel breakout. And as can be seen in the equity curve below, this strategy makes around $75,000 over a 4-year period. And that includes through 2008, which the markets dropped 40 to 50%, and this strategy continued to make money during that time. So we'll take a look at how we develop the strategy. The strategy we're going to look at today is what's known as a Donchian channel breakout. And a Donchian channel breakout was first made famous by the turtle traders back in the 1980s trading commodities. The turtles were a group of traders that were taught to trade by William Eckhart and Richard Dennis. And they made millions of dollars trading a 55-day Donchian channel breakout. A Donchian channel is simply take the highest price for the last X number of days, let's say 55 days, and the lowest price for the same period of time, and that marks the upper and lower bounds of the channel. If the share breaks to the upside, it breaks through the upper side of the channel, reaches the highest price it's been for the last X number of days, let's say 55, and in doing that we get a breakout which provides an entry signal. Now we're going to build that strategy and see how it works in today's market, looking at the top 20 companies. So we're going to create a new strategy, and yes, we do want to create one. We're going to add our entry formulas, and in Market Analyzer, the entry formula we're looking for is the price at extreme. We have to set in the number of periods we want to check, and in this case we're going to use 25 days. So we look at a 25-day strategy. The position is long, so we're only trading on the upside. The interval is daily, and the entry is when the closing price is at a high extreme. So it's a breakout from the upper side of the channel. Tell it OK. We're going to exit this on a very simple exit, which is a time stop. We're going to exit 1 day after we get in. Whether we've got a profit or loss, we're out after 1 day. Checking the entry price is going to be at the last price, exit price at the last price, the maximum value per trade $5,000, and we allow multiple open positions per security. Not going to look at brokerage at this stage, and we're going to look at the top 20 companies in Australia. Click on save, and we have to give the strategy a name. We'll call it Extreme Breakout, and click OK. Now the strategy can now be used by the trading system. Click OK, and we click on Run Strategy. And we're going to run the back test from the 1st of the 1st 2005 to the 31st of the 12th 2008. Click on Run Back Test. And the analyzer is now testing this strategy on the top 20 companies in Australia. Goes through, checks them out when they meet the criteria, and then exits them 1 day after entry over that 4-year period. And we can see that the strategy returned around about $2,000 over 4 years. On $100,000, that's not a great result. So we can look a bit closer and see if there's some other things we could add that could maybe improve the strategy. And one of the first we're going to look at is day of the week. The day of the week is Monday, and the price is an extreme. We want to trade the strategy. Click Save, click OK, and click on Run Strategy. We'll run that back test and see what sort of results we get. Now surprisingly, the day of the week does make a difference to the results you get from a trading strategy. And we can see here from the curve that we've drawn that a Monday is not a great day to trade the strategy. In fact, on a Monday we lose money in on the order of about $3,000. So let's see if another day of the week is any better. We take a look at Friday, click OK, click Save, and OK again, and we run that strategy. And we check out whether Friday is a better day to trade this particular strategy. As we're waiting for it to test that, what we'll find is that different days of the week produce different results. And here we can see that Friday is up $4,000. So if we trade on Monday we lose $3,000, and if we trade on Friday we'd make 4,000. Makes a big difference to the strategy. So by selecting the best days of the week to trade this strategy, which turn out to be Wednesday, Thursday and Friday, we can improve the profit of the strategy to around $6,000. Now we could play around with the exits and also play around with the time frames that we're looking at, but $6,000 over a 4-year period is not a great result. And it doesn't matter what parameters I try, or I've tested a number of different ones, and what I've found is that very few of them actually deliver good results trading this strategy. But there's a way that we can make good money out of this strategy, and that's to turn it upside down. So what we're going to look at is extreme reversal. It's a Donchian channel breakout, but it's a breakout to the downside. So this time, if the share breaks the downside of the channel, we buy the share to trade it long. We're looking at a price at extreme as before, and we're looking at a time frame of 15 days. We don't want to trade this particular strategy on a Wednesday, and we want to set a floating stop or a trailing stop that sits 4% below the share price. For these parameters here, we'll still enter at the last price, exit at the last price, still $5,000 on a trade, and we'll still allow multiple open positions. But we've also allowed brokerage at 0.15% as well. So we're putting brokerage into the equation this time. Click on Save, click OK, and we run the strategy. Same period of time, the 4 years, and we'll see what sort of results we get. So the Donchian channel breakout to the upside appears not to work too well, and it may be possible to alter the parameters to get better results, but I haven't found many parameters that work well. When we turn it upside down, the strategy works far better. We made about $6,000 on the long side, and now here we make $70,000 trading the downside breakout, but going long on that downside breakout. So what we've got here is a nice upward sloping equity curve, and it even made money through 2008. And great result given the market environment during that time. Now to find the trades that meet this criteria each day, we click on Menu, go to Analysis, and click on the Analyzer. We're looking for a price at extreme. The time periods we're looking for is 15 days, and we're looking for a low extreme. We're going to take a look at the ASX top 20, and we're going to review those top 20 for any shares that meet that criteria today. And as of today, there was nothing that meets that criteria. Now that's not surprising given the market's been up for the last 2 weeks. So there'll be very few shares reaching 15-day lows at this time. You can run this strategy each day, remembering not to do it on a Wednesday, so Monday, Tuesday, Thursday, Friday, to find opportunities that as they present themselves to trade the Donchian channel breakout. And we can see we've developed a profitable trading strategy. I'd like to wish you all successful trading.